Ladies and gentlemen, thank you very much for spending your evening, what all of us want to do, learn about cryptocurrencies and blockchain technology. It's kind of fun if everyone can look around the room for a minute. This is a lot of people. Wolverine crypto trading is just over a month old. Rishi here is a sophomore in the BBA program. My name is Danny and I'm a senior in the BBA program. We both had an interest, decided to put our heads together, and Wolverine crypto trading is the baby of that. Can you raise your hand real quick if you're an undergraduate student? And let's divide that up. Underclassmen, freshmen, sophomores, keep up. Upperclassmen, juniors and seniors. MBAs? I know I got you over there. Graduate students, non-MBAs? Represent. Members of the community not currently in the education system? Welcome. Professors? Thank you, faculty. This is really exciting. So thank you all again for being here. If you bought cryptocurrency and you currently own any coins, can you raise your hand? Any fun altcoins that anyone's excited about? Lots. If you're part of Wolverine crypto trading, can you please stand up? These students each got $1,000 to trade. Their goal is to maximize their portfolio value by December 31. Guys, congratulations. We're up 40% on average right now.
Up 30%. Before we jump into the presentation, I realize that for a lot of you, this is your first experience or event with Michigan FinTech and Wolverine crypto trading. So I want to take a few minutes really quickly to explain who we are, why we started, and what we currently do. So Michigan FinTech is the first student-led FinTech initiative at the University of Michigan. It was launched this September, so we're about 4 months old now. And our goal is to expose as many students at the University of Michigan as possible to financial technology and innovation. And I'm happy to say that we've made a lot of progress in our reach on campus. Michigan FinTech is an open organization. It is powered by the students, for the students, and really it's you guys that make this experience possible. So I want to thank you guys again, especially on a Monday night, for taking time out of your days to come and be a part of this experience. But I promise you, we have some amazing speakers lined up for you guys, so you won't regret it. So Michigan FinTech, our goal is to expose as many students to FinTech as possible. So to do that, we've brought in a number of companies, leading FinTech companies in the space. We've worked with companies such as Coinbase, DRW, and Moneyline to host on-campus speaker presentations and recruiting events. We also run a blog, and we also host these monthly meetings with WCT to engage with our students and to bring this experience to you guys. Wolverine crypto trading is actually a very unique project that we've had the opportunity to launch within Michigan FinTech. So Wolverine crypto trading actually stems from an idea, from a conversation in a sandwich line at the Ross School of Business, where I met Danny Sheridan for the first time. And we talked about the need for a way for students at Michigan to engage with blockchain technology and cryptocurrencies. And that was the genesis of Wolverine crypto trading. Fast forward 2 weeks later, we had our first mass meeting in October. We combed through 100 applications, interviewed 40 students. Now you guys saw we have about 16 students who are part of our fund. So what do we do? So Wolverine crypto trading is the first ever student-led cryptocurrency investment fund of its kind in the entire world. So we're making history here at the University of Michigan, so it's very exciting. As Danny mentioned, we give $1,000 to each trader from the fund, and they get to individually and independently trade that and maintain crypto portfolios. And like he said, another interesting fact that we just took a survey on average, a trader in our fund has experienced a 42% gain at this time, which is amazing. But the trading is really just a mechanism to get the best and the brightest students into one room together. So we host weekly discussion meetings with our traders, where we have presentations and book club style discussions. And we also host these monthly mass events with Michigan FinTech, again, to bring this experience to you guys. Which brings me to the event today. Like I said, we have some amazing speakers that have taken time out of their schedules to come share their knowledge and experience on a very exciting and hot topic. So we have two Ross professors. One of the Ross professors is spearheading and co-teaching the first ever FinTech course that's being launched here at the University of Michigan winter, TO 428, which I'm sure you'll get a chance to hear about. The other Ross professor, he's a professor of finance, engineering, and entrepreneurship. He's also the CEO of 2 FinTech companies, which you'll get to hear about as well. We also have a blockchain entrepreneur who started a blockchain-based company here in Ann Arbor. So we have some great speakers lined up. That being said, I'd like to introduce my first speaker, Professor Wu, who will be talking to you guys about cryptocurrencies and blockchain. Let's give it up.
Sure, yeah, I'll start.
And we've got our next speaker.
Yeah. All right, guys, we're going to start our next speaker. Oh. All right, guys, we're going to get started with the next speaker. Thank you, Professor Wu, for that presentation. It's amazing how many students, even at Ross, want to engage in this topic. To introduce our next speaker, Professor Adriaens, as I mentioned, is Professor of Finance, Engineering, and Entrepreneurship. Finance and Engineering. Like I said, he's the CEO of 2 FinTech companies. He will be talking to you guys about FinTech Solutions outside of banking and financial services.
All right. Good evening. I already had 2 courses today, so this is sort of my 3rd one. It's going to be a bit different from what Andrew presented earlier. So I'm not just going to talk about the blockchain, because I actually don't do any blockchain research. My background is I'm an engineer by training. I've been at the U of M for 25 years. My area is the clean tech space, which is technology development, technology design, and technology deployment. So I spent a lot of time out in the field proving out technologies in the real world as well. That led me to the need for new business models. Around that time, I joined the business school and was for about a decade at the Zelluri Institute. Then that led me into finance, financial solutions. And I want to talk a bit, I'm going to pull all this up here. So I want to talk a little bit about 2 entrepreneurial ventures. So I drank the Kool-Aid while at ZLI and beyond. I got involved in 2 companies. I'm no longer involved as CEO in Aquarius, by the way, so I'm advisory role. There's no way you can do this. You can fly back and forth across all continents. You just can't gain enough time to actually do this with 2 companies and try to teach. So my focus, as I mentioned, is in the clean tech space. Now, the clean tech space, the name was coined in 2003, and at that time, people basically thought about, oh, this is all wind and solar and batteries and all of that. We're well beyond that. We're in clean tech 4.0. It's all data, services, and yes, green financial technologies. So clean tech has really moved well beyond that. I am going to focus today on natural language processing and AI for smart asset allocation. In the blockchain, though, I guess a very exciting application, I was talking about that in my green finance course earlier today, is the energy space. The energy space, the core energy space is being completely disrupted by FinTech and by blockchain. Just have to look at the Brooklyn microgrid, where basically, utilities are starting to pull themselves out of distribution. Think about that. In Finland, energy utilities, they still do generation and transmission. Get out of distribution. The distribution becomes a blockchain-enabled marketplace. So they're managing, actually, the demographic that they're serving. So as Andrew already mentioned earlier, it's really beyond cryptocurrency. It's really beyond blockchain. But FinTech is a very broad space. When FinTech sort of got started in the very beginning, a lot of that had to do with remittances, efficiency in remittances. Essentially, the FinTech space, the way I define it, is it's a disintermediation technology. Just kind of like clean tech in the early days was a very squishy thing. FinTech is a very squishy thing too. There's a lot of different applications. And this is just from CV Insights, analytics, sentiment analysis, quantitative trading, AI, bots, all of that, credit scoring and whatnot. And of course, we do have blockchain as part of that. So I'm going to be talking about, two companies I got involved in, one which is in New York with an office in London. The other one actually still is here in Ann Arbor. So let's talk first about Carimbus Asset Management, and we're going to go into Aquarius Risk Analytics. So what do I do, or what do we do with the team in the space of green fintech and asset management, or smart asset management? Processing, not natural, not NPL, NLP. So information, so doing text-based, analyzing text-based disclosures, financial analytics, deriving insights from that, trend structures, valuation and risk, and then making smart asset allocations. So within Carimbus, the focus is on investment risk signaling from unstructured data. So we developed this tool called the Keystone Compact, and it's really all about trying to find risk and find opportunity in unstructured data, much like we're just talking about Goldman Sachs. One of the big investments that Goldman Sachs made in a fintech startup is in Kensho. Kensho is a company that does natural language processing to look at future risk. It's not a financial company that deals with financial data, that deals with unstructured data. So we do a lot of analysis in social media, demographic data, other types of information, get predictive analytics, algorithmic indicators out of that, look at the investment grade of mainly private companies. So this is not public companies, we're dealing with private companies, and then ultimately make asset allocations and decisions. Our beachhead market, is that the one? Yeah, that is the one. Beachhead market is the Global Clean Tech Cluster Association. I'm a co-founder of the association. In 2011, we got together with a group of about 4 country managers from Finland, Switzerland, the US, and Ireland, and formed the Global Clean Tech Cluster Association, which now is active in 27 countries, 54 economic development clusters, and 10,000 companies. They're really hoping to build out and working on building out a hub and spokes model to grow green economies globally. And so they really started in Finland, where I spent the last 3 years, and building out globally. So basically, we look at all these different companies using these natural language processing tools in all these different clusters and map them out in terms of industry risk, market risk, and team risk. So they all get fairly quickly mapped out, so we can actually bucket, I guess, where the risks are of these particular companies, then look at risk and return valuations, and help the investors in these different economic development clusters to invest in these companies. And these are just some examples of companies in the various different countries where we're active. Now, out of this here, if you can fairly quickly analyze a portfolio of companies, you can theoretically structure a fund. So in Finland, we started in Finland with multi-asset renewal funds, which we structured and became part of the country's response to the climate accords from Paris. Basically, how do we scale investments in green companies to transition legacy economies into green economies? If we can do fairly quickly triaging of companies, supplemented with financial analysis, we can develop investment portfolios. While I was there, I got a call from an NGO here in Chicago, and I said, hey, I see what you're doing over there in Finland. Can you do the same thing for the Great Lakes region? People say, why would private investors come into the Great Lakes region, as in the mainstream investors from New York and whatnot? I said, well, because the Great Lakes region, all 8 states, 2 provinces, is a larger economy than California. $5.6 trillion. So that actually gets the attention from New York. So basically now we're building about $60 million, starting a pilot, Great Lakes and St. Lawrence Blue Growth Fund. It's a multi-asset investment fund to invest in the Great Lakes region. Ultimately, we're going to grow to about $500 million based on all this natural language processing data and information. Next, Aquarius Risk Analytics. Some people were asking me, what the heck is water risk and why does it have anything to do with these investment analysis? And that's a very good question. However, there is a group in New York that has formed. It's called the Investor Water Hub that have $1.8 trillion in assets under management between fixed income, private equity, public equities, and values-based investors that are figuring out how to manage supply chain risks in all their verticals and the companies within their verticals. And basically, how do you manage for that? They figure, is there a way that we can actually price these externalities, the water risk, the natural resource risk that presents a resilience problem for all these companies, can we price that into a portfolio-based model? And effectively, that's what we're doing. So essentially, portfolio theory, as most of you know, the risk is represented by volatility risk by financial beta, which correlates stock volatility to a broader benchmark. So what we are doing is essentially uncovering a water-specific beta. So we've been working with New York Green Bank, Credit Suisse, and a couple of other players to try to figure out how we can actually do asset risk pricing in stocks. And basically, we can set up these 2x2s now that are essentially a financial beta versus water beta. And over time, we can track, based on VAR analytics, sort of where the volatility is coming from and how you manage your asset allocations. And I want to keep it at this. We're doing this with MSCI as our primary partner. MSCI, the indexing companies, mainly focusing on mining, precious metals, and steel. And energy utilities, and figuring out how to price water asset risk in portfolios. So this is an application of FinTech. It's not a blockchain application, but it is an application of FinTech in asset allocation, asset management. And that's it. Thank you.
We've got time for 2 questions. Are you okay taking a question or 2 right now? Thank you. All right. So I'm going to open up the audience. Does anyone have want to lead with the first question? There's one. Right.
What would you say would be the #1 kind of opportunity in clean tech or in the social enterprise space versus the core business space?
Yoo-hoo, that's a tough one. Of course, we got the various different funds here that Ross managed through ZLS, Social Venture Fund, and others, I guess, that are looking at all these different things. The #1, I don't know what the #1 would be. But I guess in the clean tech space, tied into FinTech, it's really all about new data-driven business models. So to shift a lot of your attention to data-driven business models, because that's where you're going to find your scalability and your financial technology applications.
So can I ask one more question to clarify? So can you talk us through what kind of unstructured data you deal with, and maybe give us an example, and then give us an example of how that leads to an investment decision from a high level?
Okay, so I think I had a couple of examples over here. So if you're looking at that little cloud up there, so this could be anything from Crunchbase data, LinkedIn data, just general scraping, because we're dealing with private companies, so there's no SEC disclosures or anything like that available for us to take a look at. Obviously for CB Insights or facts, this is Facebook, that kind of data. So essentially, we query the APIs from each of these companies, the kind of data that they make available under an agreement, and structure these as being, are they management type risk, are they industry type risk, or are they market type risk? And that is, of course, the proprietary part of, I guess, the algorithm. Now, all the AI behind it is how do you correlate all that information and relate, for example, an early stage company that does not have any money yet, has no money in, doesn't even necessarily a defined market yet, or even a defined team yet. We're going to say, what kind of company could this be? So you can actually start querying this. Is a company going to be a healthcare company? Is it going to be a diagnostics company? Or is this going? We can actually query companies, early stage companies as well as later stage companies, based on this kind of data and how it compares to larger comparables based on unstructured data, not on financial data. So we're not looking at revenue multiples or things like that. We're really looking at more sort of the forward-looking data, the forward-looking unstructured data.
Thank you very much.
Yeah.
Let's give him a round of applause.
Thank you. William's good. Right.
ending at around 8:30, and what we'll do is, if anyone needs to leave, we'll head out, and then we're going to be doing some more follow-up questions for those that want to stick around for a few more minutes.
All right, fantastic.
So you guys have heard a little bit about Bitcoin, a little bit about blockchain, a little bit about FinTech Solutions outside of traditional financial services and blockchain. Now, in banking, for our last speaker today, we have Sam, who is the founder and CEO of TwoScoreTwo, which, like I said, is an Ann Arbor-based company that uses blockchain technology to solve the problem of supply chain fraud. So, take it away.
Fantastic. Good evening, everyone. My name is Sam Savant. I'm the founder and CEO of TwoScoreTwo, and we are a blockchain commerce company. So we're not just built on blockchain, we're building blockchains. So we are a core technology company which builds blockchains from all the way from the ground up, all the way to the user interfaces and applications. So a little bit of clarification right there, right? So we started this company last year, and we've been very fortunate to be part of the UFM ecosystem here. We've gotten funding from UFM through the DISA Accelerator. All of our talent is from UFM. They have built our company from the ground up, and I'm very, very fortunate and blessed to be part of this space here. And we're intending to grow in Ann Arbor in the future. So this was interesting about starting a blockchain company is, so the core issue was, what is the problem we were trying to solve? So I've been in the global trade piece of our B2B space for 15 years, so as my co-founder, and we discovered there were certain problems in this space. So if you think of how global trade occurs today, you have products which are moving between companies. What's moving along with those products? There's data, huge amounts of data. There's huge amounts of money which is being transacted at the same time. So if you're using traditional ways of moving money and data, those are subject to a lot of risk. There is massive fraud which occurs in that whole space. Just in the US, you had about 30% of the companies last year have this entire movement of data and money breached. So on an average, each breach costs about $2.7 million. And you're talking of close to, what is it, $930 billion of US annual revenue, which is lost because of these information breaches and because of these currency breaches, right? So we said, how are we going to solve this problem? So we identified what are the various ways in which fraud occurs in the system, right? It's huge. There's counterfeit products, there's data tampering, purchasing fraud, fake deliveries, so on and so on. Where does blockchain really play a role in here, right? How do we establish trust between untrusted parties? How do we make data move between parties so that it can not be intercepted, and even if it is intercepted, it cannot be decrypted, right? How do we establish that someone who is sending this data is the person who's supposed to be sending this information, right? Those were some of the core things we started off with, right? We said, we're going to solve these problems first. We're going to solve impersonation, we're going to solve payment fraud, and data leaks and tampering. Those are the three we're going to solve first, right? How do we go from here to blockchain, right? So we spent about 6 months building out a platform. So we evaluated, okay, we could go Ethereum, we could go Bitcoin Core, we could go all these other blockchain frameworks which are out there. And then we decided and we settled on saying, well, none of these really work for the solution we're trying to provide to B2B companies. We're going to have to develop our own. So we started off with a base blockchain platform, if you want to call it like a Bitcoin Core type solution, and we built on top of that. So we took that, we built a huge amount of cryptography, which doesn't exist in blockchains today. We built that out. We realized we needed a middleware because you need all these companies to be talking to each other. You need some sort of business logic. You need some way to say, I'm going to approve this document, I'm not going to approve this document. So you need that whole middleware piece put together, integration with other applications. So we built that piece up. And we said, well, all this is great. How are people going to interact with it? Using a terminal window? Is that the right way to do it? It's not. So you're going to need a full front-end system to interact with it. So we built that whole system out before we figured out how are we going to sell these solutions into specific verticals. And that's where we got into Desai Accelerator in summer of this year. And they really helped us craft that message into saying, this is a specific vertical you want to focus on, this is how you're going to sell it, this is how you're going to price it, and commercialize this whole space, right? So we're going to get into that real quick in a second here. So you see in the middle out there, that Vulcan blockchain platform, that wasn't even branded. That's something we branded in the last couple of weeks. That is what we built out first. Guess who built that out? Any guesses? Who took all of that stuff and built out this entire platform? U of M students. There were freshmen, there were sophomores, and there were seniors, and some juniors. These are the guys who built the entire platform out from scratch. I'm not kidding, absolutely. We have a team of 8 engineers who worked on this. We're not talking of some super prized engineers with 10 years of work experience. Of course, I have a lot of technology experience in running technology teams, but that aside, I'm not doing any of the coding. I have a lot of cloud deployment and cloud infrastructure experience, which really helped. But the entire platform was built out by U of M students. And it's not right to just call them students, right? They're the guys who created this whole system. They're more than just students, right? So we built that piece out first. Then on top of that, we said, how do you now create these digital trading communities? So if I'm, let's say, General Motors, and there are 10 other companies, well, there are thousands, but let's say 10 other companies who are working with me, how do I give users within those organizations their own credentials, give them ways to interact with other users, set up different approval paths for payments or for data? So one of the pilots we did was with a very large content management company, and they said, we went to them and said, well, we can move about 4 megabytes of data on the blockchain. They were like, you've got to be kidding me. How much do you need? They said, we need 5 gigabytes at a time. So we're like, that makes no sense. How do you move 5 gigabytes of data in a transaction on the blockchain? We asked them, why do you need that? Well, they were like, well, the engineering drawings, the journal articles, you want to send person to person, or one person to several people, and only they're able to access it. How do we do that? So we spent about 2 months figuring out and deconstructing and reconstructing our blockchain to say that we can move 25 gigabytes of one single piece of data on the solution, synchronously and asynchronously through the blockchain, and still have that cryptographic support and all of those things which come along with it. So, and again, built by whom? U of M engineers. It's amazing. One of them actually was was also a Ross student at the same time. But then he dropped Ross and just went into pure technology at the end of this whole thing. Right? So anyway, that's different. So that was one of the pilots we did. We also, and so we built out that entire framework. And then we said, well, it can't just be a cryptocurrency. It has to also include regular fiat currencies. How do you move regular fiat currencies on the blockchain? And we figured that piece out. So we're able to, what we're calling virtual currencies. It's actually a fine cent definition of what a virtual currency is. So we go to a bank and say, we have a one bank solution for you. You create your own virtual currency, right? Once you create a virtual currency, you can move it between this closed private network of companies who want to work with each other and really simplify the whole trading process. And we did a pilot with a very large bank to do that, and now they're working with us to do other things. But so what we did was, starting from there, we built out a payments and data product, which is our Minerva product. So we have 3 tiers in that now, making it easy. So if you're just a regular trader, you want to settle up with somebody else, sign up, settle up, and it's a one-stage process, you're done. Right? So almost like a SAP or Ariba, similar systems out there. But you do things like this. If if you are a larger company and you have a network of suppliers you want to work with, you want your own branded network, we'll let you do that too. As a third thing, if you're a very, very large company and you don't want this to run on the cloud, you want it on your own infrastructure, on everything of your own, we'll let you do that too. So we have 3 different pricing tiers we have to come up with. All of this didn't just happen magically. We spent a lot of time talking to customers on how to figure this out. So there's a lot of customer discovery which was happening all the time as we were developing the product. Right? As we were doing this, there was a lot of interest in just our basic platform. We said, we don't have time to build out all of these things. All these other verticals asking us for blockchain solutions, but we can't focus on all of them. There's people who want ad tech solutions. There's people who want something in insurance. There's people who want something in banking. We can't build all this out. We just don't have the time to do it. But we have a platform which already does all of this, including an ability to build decentralized applications and front ends. So we have a way where they can come in and build out their own solution on their own using their people. We can support as needed. So that's where we branded it Welcome. The third piece is something we just recently started. As we started selling to companies, we realized they need a lot of help to even figure out how much money they're going to save, because that's the first reason people will buy from us is save money. Second reason they'll buy from us is retain customers, right? Increase the valuation, things like that. So they need a little bit of help. We don't anticipate that third piece to be a huge revenue generator. It's just really to get the message out to companies to help them up that little bit of hurdle, help them put that business case together to say, this is how you're going to save money. And so it's a little bit of advisory solution, right? We haven't done that with too many people yet because that's been a part of the sales process. And there are companies who are asking us for that. Help us understand what blockchain is. We're talking of really large retailers who are doing that with us today. Help us understand what blockchain, help us understand how this can save us money. We're really worried about getting into that space because we don't want to become a consultant, because we really want to just sell these 2 pieces here. Really just the first piece, which is Minerva, but people need help, right? We can't ignore it. So we're going to try it out a little bit and see how that works. So that's the evolution of these 3 pieces, really. Some of the challenges we faced, right? Huge challenges. Investors are a different animal than customers. What investors need is they put you in one of these 3 categories. Are you the same old thing? Are you another ride-sharing platform? Big whoop, right? Are you the next thing? Are you the next amazing thing which is coming out? Machine learning, VR, something like that. Or are you absolutely out there where you're going mining on the moon? You're working on the warp drive. Different ways of evaluating those companies. We had to fit into one of those. Right? So we're probably somewhere between the next big thing and the out there. Right? So it's different ways in which investors look for us, different stories you have to tell them on how we are valued. Customers look for those 3. That's it. They don't care whether you're the next big thing or not. The guy you're selling to wants his promotion. She wants her next performance bonus, and so on. Right? So we have to spin different things for different people. Regulatory and legal issues are huge in this space. The Fed has given us a very, very narrow corridor of operation with blockchains and cryptocurrencies. Like we have to really tread very carefully around that space. Talent is always a problem. We've been lucky with UFM engineers, but thanks to Facebook, Google, Amazon, they keep taking my talent away, right? And then again, the other huge problem we had to work with was whether we are all things to all people or be vertical specific. Luckily, we decided on a specific vertical and went down that path and really cleared our value prop, right? So here's the founding team. That's myself. A lot of experience in supply chain and technology, all sorts, very large companies. Manuel's my co-founder. Another huge experience in global trade. And he has TriTech, TwoScoreTwo. So together we have about 60 years plus experience, plus all the other advisors and the teams who've been helping us. So I'm a UFM alumnus. I got my master's in computational mathematics from here, 2011. And we have, I think, academically, we have like 9 graduate degrees within the 3 of us. So it's a very talented team. And our base, our engineering team force is highly talented. And so thank you, and appreciate it. Would love to talk more about what we're doing and how we're doing this.
All right, so if you need to leave, feel free to trickle out. All right, Sam, so I've got 2 questions for you. The first one is, are you hiring? Or if students here are interested in learning, can they reach out to you?
They can reach out to me for sure, anytime. More than welcome to do that. Yes, we are hiring.
Okay. Second question is, when investors or customers try to understand your technology, do they? Like, do investors know what's going on?
Customers understand the need. We give them a solution, they understand that. Maybe the third conversation is when we get
Good conversation.
yeah. Investors, it's difficult to find the right investor and understand it.
And now I'm going to invite our 3 speakers to come up and take some questions from students, as we've got 10 more minutes until 8:30.
Yeah. Thank you.
All right.
Anthony, what question? Oh, sorry.
All right.
Yeah, I have a lot of comments on that.
Now we're going to be going through questions. I'm going to be walking around with the microphone. If you could please ask your question into the microphone. And if you could gear it towards which of our 3 speakers you'd like to hear answer. And do you want to introduce yourself?
All right, my name's Ozzy. I'm a journalism fellow here at the university. And this question, I guess, is for Sam, but if the other 2 want to answer it, feel free. You mentioned fiat currency and working with banks, and if I heard you correctly, you spoke about fiat currency being created on the blockchain or being transported on the blockchain. Can you just specify how that takes place? How that works?
So there's a couple of ways we do that. One of the ways is actually where the bank issues a virtual currency, which is like it's backed by the dollar. So you deposit in $300, you get $300 of virtual credits. You can move those around within, and then you can deposit it back to the bank, and you get $300 back. That's one way to do it. The other way to do it is where you're actually moving the money around between banks a regular way through a payment exchange, but the evidence that you paid people is written onto the blockchain. Right? So you actually have the evidence that a transaction was made, which have all the security and everything in the blockchain which you already get with moving virtual currency or cryptocurrency.
All right, next question.
For Professor Wu. So I had a question about Bitcoin. Do you think it'd be better to consider Bitcoin more of a store of value rather than like a currency, rather than something you'd be making like transactions with, but rather like a store of value for like long term?
Great question. Great question. How do you value an asset? Just curious. Yeah, you know, like just in general, how do you value anything, like a commodity or kind of like stock, bonds? Value. It's like the present value of future cash flows, right? So for Bitcoins, it's tough, right? So because you don't know what kind of cash flow you're getting from that. So you can use the alternative model. The risk you're taking, that's certainly a lot. So you're going to be demanding a lot of risk premium. But you know, from the stored value perspective, I am pretty skeptical. Again, this is my personal opinion, no way of investment advice. Yeah. But I'm pretty skeptical, right? Another thing about Bitcoin as a trading kind of instrument is that it's not a proper trading instrument.
because to properly trade something, you need to be able to both long and short it, right? But as an individual investor, you cannot borrow money using Bitcoin. You can do it as a company, but it's still tough. So you cannot properly short sell a Bitcoin. And without short sellers to sort of balancing out the kind of sentiment from the buyers, it's sort of like an unbalanced market. So I wouldn't hold this thing for my grandchildren's education funds. Let's leave that way. Yep.
So there's actually $150 million worth of shorting positions open up BitMEX right now.
Right.
So what do you think?
These are like derivative contracts, right? So they're not really, they're synthetic shorts. So you can't borrow Bitcoin and then so you know what I mean. So you need for a proper short, you need to be able to properly I borrow this thing, buy it back later.
Well, yeah, I'm lending on Bitcoin right now.
What's the cost on that?
2.5%.
That's right.
I mean, I get small returns.
That's right. That's right. You have a so the shorting cost is pretty high. Or even like this for individual investors, like astronomically high. So I would be very cautious and consider this a long-term store of value.
Thank you, Professor Wu. And now with our next question.
Hi, I'm a senior at the business school. I have a question for Sam. I just want to have a better understanding of the business model of a blockchain company. How do you make your revenue and what are your major costs? Also, my second question is you talked about what are your challenges were dealing with investors. Have you ever thought about doing an ICO, which is a hot topic right now, and what are your thoughts about it, or against it?
Let's start with the second one. We're not going to do an ICO. Reasons are long and varied, but really we are selling to businesses. I don't see a way to bring the general public into it or issue tokens, which makes sense, where regular investors or speculators will buy into this. I don't believe in speculating on the platform, and that's not the way we're going to go about it. We don't need that much money, honestly. We built out a lot of our technology. The money which is needed is not sales and marketing. That's where a lot of our costs are. It's a working capital problem. We have to survive for 6 to 9 months before we make a sale, because sales lead times are 6 to 9 months, right? So how do you keep the team funded for 6 to 9 months, keep cash, still going and selling more out there? So that's really where the funding gap is for us. And most companies in B2B space, that's where the gap is for us. So most of our dollars go into keeping the IT team alive, keeping the marketing team going, and funding working capital. Was the first question you had was
the business model.
business model?
Yeah.
There's two ways. We make money using subscriptions and transactions. So we charge a transaction fee, very minimal, and there's a subscription model, which is not minimal. According to you.
Hey, I'm Tyler. I'm in engineering. I have a question for Wu, but anyone else can feel free to answer. So one of the things you talked about was kind of like this crypto puzzle that you have to solve to get Bitcoin. So how does that, or any coin, how does that change for this decentralized markets once like quant computing and stuff like that comes about? That can solve those crypto things a little bit easier.
Whole thing would be unraveled.
Yes.
So
Whole thing. What does that mean though?
So quantum computing can break most of the encryptions used in any kind of blockchain, like Bitcoin, whatever scheme you use now, very quickly, theoretically, very quickly, instantly. So if that comes out, the whole thing would need to be reevaluated. The whole area of cryptography needs to be redeveloped. Fortunately, or unfortunately, from your perspective, it's not coming anytime soon because the hardware is sort of lagging behind the theory. So we are at least decades away from coming up with a quantum computer that's good enough to break the sort of equation they currently have. So, but good question. We need to rewrite the whole, not just the FinTech, but all kind of encryptions in cryptography needs to be rewritten.
And Professor Wu, what is quantum computing?
Yeah, so you have regular computer, right, which is you have a transistor or whatever you call that. You have two states, 0 and 1. Okay, so it's either on and off. Quantum computing, using like sort of layman's terms, my limited understanding would be you have a state, you have infinite amount of states between 0 and 1. So theoretically, you have a lot of computing power than just a regular computer. But it's limited. So the quantum computers are best at breaking encryptions. Not really good at anything else at this point, but cryptography, that's where that thing really shines. And also communication as well. Okay?
My name is Federico. I'm actually a data science and engineer. And I know your class is only open to BBAs right now. So how does a non-BBA student go about getting into your class?
Is open to all university students. So, but right now there's a wait list. So if you sign up, I talked to the administrators about getting a new section because we don't want especially seniors to be left out. So depending on when this thing closes, we'll see how many people on the wait list, we'll see how many we're gonna open a new section or not. So, but you definitely, if you're interested, you can sign up after your registration appointment opens.
Right.
So
No restriction.
I would love for that to be the case, and maybe there's some miscommunication, but I tried to sign up today, and I got a big red X.
That's weird, because I just talked to the registrar. I got the answer that there's no restriction. I promise you this will be resolved. If not for tomorrow, fairly soon. Okay?
Hey, my name's Evan. Thank you guys again for coming. This was really amazing. My question kind of comes down to Sam. So you mentioned how cybersecurity is a huge issue, obviously with the blockchain as well. Trying to develop that, and I mean we've also heard about the different hacks, different glitches as well. Into the future, I know I've read some articles, like some opinion things as well, like saying that cryptocurrency might be used to help cybersecurity, but then how do you see that kind of working together, especially with your company, kind of helping prevent supply chain fraud?
So let me just understand if I got your question right. How is our company helping to reduce supply chain fraud, or
Well, kind of in terms of like the macro sense, because cybersecurity is such a huge issue, it's going to continue to grow anyway.
Yeah.
How do you see yourself, I guess, fitting into that space, and how far do you see cybersecurity as a whole growing too? And how big of a deal?
couple of things around it. One is the security. You can think about it two ways. One is the security of the data itself, like the ability that no one's going to be able to hack into that data as it's being transmitted from person to person. That is something which we do completely using symmetric, asymmetric cryptography, hybrid, blah blah. Right? So we do that today. It's unless you lose your keys, it's really difficult to break into that cryptography. It's almost impossible to break into. So that is one way to solve it. There's always a core issue of what happens to the keys, who's managing the keys, right? And we have a way where the keys can, for organization, the organization manages the keys at the node level, or you can split it out and have offline key management at the user level. It depends on what the organization wants to do. So we have to develop both options of doing that, right? The third option is the keys are stored in a key vault, just like Coinbase does it, or someone else does it, right? So we have all three ways of doing it. So yes, you can secure the data, you can secure the identity. Securing identity is really tough because you're talking about people here who may lose their keys, right?
Five characters, I'm gonna do something.
Securing payments is similar to securing data. The transactions itself, which are written onto the chain, which are encrypted and secure, are different from the data which is written on the chain. Bitcoin doesn't encrypt your data. One, it doesn't do too much data to begin with. But whatever data it does, it doesn't encrypt it when it's written onto the chain. That is something we have to work on to solve that issue. How do you secure the data so only the right people get access to it?
Thank you, Sam. And now we're gonna have our very last question to wrap up tonight.
Thank you. So I've been trading, I guess, altcoins primarily since about May of 2016. And I don't really know too much about the technical side of cryptocurrencies or really using it in terms of like practical terms. But in terms of treating it just as like a general asset, what kind of future do you really see it as having, and what do you see as driving it? Examples in the past I sort of looked at, it's been like the Cypriot financial crisis, the instability following, I guess, the debt crises in the EU, and how, I guess, cryptocurrency has been impacted by that. Same thing in Venezuela recently. how do you see like geopolitics and things that we see as driving normal things like stocks and bonds as impact cryptocurrencies? And what's the longevity of cryptocurrencies as an asset? Anybody in general, the whole panel.
I'll give a quick answer. So my guess, again, I'll go back to the traditional finance thing, how they're valued that, right? So there are two sources of where you get your return from, right? So one is compensation taken on the risk, right? So for Bitcoin, you're taking a whole bunch, right? Well, general volatility, you're taking up cybersecurity risk, also geopolitical risk is part of that. China has shut down all the Bitcoin exchanges, right? So that's part of the risk that you need to be compensated for. So in terms of returns, so that's number one. And then another piece, particularly with something that's so new as Bitcoin, is in your asset pricing model, we have a term called alpha, right? Something not coming from rational kind of pricing ability of the risk-based pricing, which is investor sentiment, right? So how much of these things is driven by sentiment, and that goes out with the whole kind of like bubble mentality sort of thing, right? So an example of that would be like the tulip mania, right? In the Netherlands in the 1700s. So Google that up and see, how that happened, and how this whole thing unraveled. So investor sentiment comes in cycles. So there's an earlier cycle where some people get excited, and then there's later cycle where everybody gets excited. Like grandma wants to buy some Bitcoin, right? That's when you want to be very, very careful, because that's where the investor sentiment's going to turn. Now, so I would watch both pieces almost equally, kind of equal tendency. So geopolitical risk is important, but I will also watch investor sentiment. Very, very important. Yeah.
So like I wasn't really a raw student, so I'll be honest, a lot of that was kind of over my head. But in terms of just like I guess yeoman's terms, like how would you sort of see it in terms of like substitution effects and how risk in actual currencies, risk in like actual fiat markets is sort of driving crypto markets, and how do you see like crypto markets with all this capital kind of rushing in? How do you see that as like a risk? How do you see is it a bubble because all that capital is coming in? Is there going to be like a sort of a pullback, or is there going to be a substitution pullback, or is it going to kind of like, you know what I'm saying?
Right. Again, it's like all kind of investment. It's a random walk, right? So the price market go up or down depending on two things: whether or not the risk profile changes, which a lot could be changing, or whether the sentiment changes. The sentiment is notoriously difficult to forecast. Peter, as you probably, so both of us do research in text mining. We devote our lives to forecasting investor sentiment, and that's a really tough job. So, there's some guidelines that use forecasting, but again, it's tough. So, again, I would watch most of the indicators very carefully, before giving out any kind of prediction, because inherently, especially the investor sentiment, is not really forecasted.
I think, just to clarify that a little bit, I think as a society, we got together, created something called the government, and then we gave the authority to the government to create money supply for the rest of the market and gave it tools to regulate that. That is not there today with cryptocurrencies. And that is a huge problem because not the entire spectrum of society has access to cryptocurrency. We need to solve that problem. How do you get everybody access to that currency? Remove the speculative nature of it, make it easy to work all the levers which governments have today to control money supply and inflation. For that, the way I see it happening is governments will have to issue these cryptocurrencies and push it through banks, which are the traditional ways in which money enters the supply, right? So
just
yes, to an extent, it does defeat the purpose.
Just follow up on that though. So there are now nascent efforts here, both in the U.S., Canada, and Japan, to sort of issue digitized version of the currency spearheaded by central banks. So in the Canada efforts failed. In the U.S., there are a bunch of companies called R3, the consortium. They're working with the Fed of the Fed coin, right? So the idea is, one Fed coin, $1 digital dollar is backed by a real U.S. dollar. So when you issue a digital dollar, the one paper dollar has to be taken out of circulation. Now the Fed loves this because they can monitor, all sorts of transactions. Right? It's a good thing for the IRS as well. But again, the implementation is tough. And another country that's doing that is Japan. So in Japan, a bunch of the major banks have got together with Bank of Japan to launch the J coin, which I think has a little bit more promise. The digitized version of yen, which they launched before the Olympics in Tokyo in 2020. I've been in talks with some of these banks. So so there's some efforts being made, but it's very very kind of early stages.
Denmark is trying.
Denmark, yeah.
The bank we are working with is actually launching or will be soon launching their own dollar-backed virtual currency, right? Because they don't want to be part of R3 because it's like already getting 60 to 90 banks together. Right? They want a one bank solution with their own currency. It's going to evolve to where the Fed's going to say at some point in time, this is crazy.
You're going to need involvement from the central bank. That's the bottom line. That's my percent. Yeah.
What do you think of untraceable cryptocurrencies? Like they're just untraceable. Like how does the untraceable cryptocurrency like play in the market?
With the Fed, it's not going to be untraceable. So at least not to the Fed or to the regulators. This is the whole draw of why they want to issue this thing in the first place. So a lot of the dark kind of just like the experiment in India, right? So the demonetization in India, they want to push people toward the cashless transaction. The part is they want to get rid of the black markets where a lot of these things are done by cash. Government don't like it, so that's their main incentive to do a digitized version. Oh, I can look at it, So despite all the security stuff, and if they want to look at it, we can look at it. And with that, I just want to put one more thing. So when I do a mobile payment app, right? When you download that thing, there's a huge list of the stuff that you're supposed to give permission to the app to ask all your information. For that convenience, most of us will click yes. So if the government does the same thing, we'll probably do the same thing. If it the cost of money transfer goes to zero, government does it. Will you click the yes button? Absolutely. So, all right.
So can we give a quick round of applause? If you guys have a few more minutes to stick around and take some questions, we invite students to come up and chat. Our next town hall is going to be held December 15th. More information available at the Wolverine crypto trading website, as well as Facebook. Thank you to everyone for coming, and have a great rest of the night.
If anybody's interested in joining Wolverine crypto trading for our next cohort or joining the team on Michigan FinTech, please come up and talk to Danny and I, as well as the team over there.
Sorry, what? What's the team? I don't have people on my team, so it's not bad. I mean, we haven't even worked on anything yet, so. How about you?
Like for my group, there's only me and the other guy who can actually play. And the other two girls just party with
They're like, kind of, can't do it.
That whole track. I'll walk back. Keep walking back. I gotta go get a charger. I've been meeting with Danny and I. No one has the MacBook Air right. What's that?